Hello everyone, Happy New Year. Good to see a lot of you here today. Could one of you please just message in the chat if you can hear me okay? Brilliant, thank you Andrew. Excellent, good stuff. Okay, well hello traders. Welcome to today's webinar on the flow of funds cycle in the cryptocurrency market. So I'll explain today how investors' funds flow
This conference will now be recorded.
Okay, we're being recorded. I'll explain today how investors' funds flow around the cryptocurrency market across various market segments and how we may be able to use this information in our asset allocation or indeed our trading in crypto. For those of you who have questions, please save them for the end. We'll do a short Q&A then. Good. Okay, let's get started. So the flow of funds cycle in cryptocurrency. So analysis of the cryptocurrency market allows us to understand how money flows across the ecosystem. The market tends to exhibit a flow of funds as investors' money trickles through the market across various market segments. This tends to result in waves of price increases across the different sectors. Being able to spot this cycle will allow you to develop an edge over other market participants that aren't aware that this is going on. So this image here just gives you a brief overview on what I mean by waves of price increases. So we can see the different segments there. You've got Bitcoin, large cap altcoins, and some of the others. And now I'll go into some of these in a bit more detail in the following slides. So what are the benefits of knowing about this flow of funds cycle? What can it tell us? It allows us to anticipate significant market moves. It gives us insight into what larger players may be doing in the market. And ultimately, it allows us to identify at what stage of the cycle we are in to improve asset allocation and our timing across the different market segments. So that's a brief overview of what the cycle looks like. Now here are the details of the cycle. It's an overview of the flow of funds. Investors' funds typically flow from left to right before returning back to the beginning again across 6 to 7 stages. So the cycle begins with Fiat onboarding in the left, in the red. This is where cash such as pounds, euro, dollars, whatever your fiat currency is, enters the crypto ecosystem through deposits. So this could be with your broker such as Coinbase, Bitstamp, whoever it may be. It's the initial depositing of cash into the system. It's this cash injection that is needed to start this market cycle and the subsequent price appreciations across different market segments. So this initial onboarding of cash is the very beginning of the cycle. Next, once cash is deposited with the broker, an investor will typically buy Bitcoin as their first investment. So this shouldn't be a surprise to any of you. Bitcoin is by far the largest cryptocurrency by market cap, and the one that usually makes the headlines in the news. We're seeing that a lot recently on CNBC. It gets a lot of attraction, and hence this attracts the most interest from investors at the outset. As people begin to invest into Bitcoin, the price begins to rise. As the price rises, investors begin to accumulate profits on their positions, and many begin to look for other opportunities in the space to help increase their returns further and put their newfound profits to use. So far, this should be fairly obvious to all of you. People on board, they buy Bitcoin. I'm sure you have family members and other people that have talked about Bitcoin, less so some of the other tokens. So that's their initial purchase when they enter the system. This is really just an image, it's a live snapshot of fund flows. I took it a little while ago, which shows the movement of funds from fiat currency, so USD, Japanese yen on the left, into Bitcoin in the green. So we can see here the fiat currencies on the left. A majority of the flow goes directly into Bitcoin. That's this big pillar in green. We won't go further on just yet, but as you can see from Bitcoin, it goes into other areas. But this should just give you a bit of insight into the amount of flow from fiat currencies into Bitcoin as the core asset. It's fairly obvious in this chart that it is the most popular investment from fiat to begin with. Next is when investors will convert to large cap altcoins. So with the profits from a recent uptrend, investors search for increased returns and look to diversify into altcoins. Ethereum is usually the greatest beneficiary of this flow, being the largest altcoin by market cap. Usually these altcoins are offered on the exact same broker or exchange where they bought their original Bitcoin. In addition, their Bitcoin is also directly paired to all of these other altcoins for trading. For example, ETH BTC is a common trading pair. It allows investors to trade directly from Bitcoin to Ethereum without needing to convert to cash in between. This flow tends to cause a price rise in these large cap altcoins, such as Ethereum, usually as Bitcoin's price tends to come to a halt or it begins to retreat. This is when the commonly termed alt season will usually begin. It's also important to note here that these large cap altcoins exhibit much more volatility than Bitcoin and are considered much higher risk, usually due to the fact that their market cap is much smaller than that of Bitcoin's. This means that these flows usually cause a greater percentage move in price than that of Bitcoin, helping investors to yield greater returns in the process. What you also note as well, which is just worth mentioning, is that investors' risk appetite begins to change over time across the cycle. As they search for a greater yield, they then start to enter more riskier investments. And as we've mentioned, the altcoins are far more volatile than Bitcoin is currently. Here's again another image, which is the next stage of the cycle. So we can see on the left is Bitcoin and the flows from Bitcoin into some of the other altcoins. So again, we can see here Ethereum, as we mentioned, is the greatest beneficiary of this in the green. But many people do trade between Bitcoin and other altcoins, not as large as Ethereum, but kind of on par, still large cap. And this will give you a good snapshot on the kind of split between some of those other assets. Here's another image. It's a chart I drew up showing the beginning of the flow of funds cycle in action. So this is a chart from the end of the bull run in 2017 and 2018. We've got Bitcoin in the blue and we've got Ethereum in the orange. So you can see that Bitcoin reached its all-time high of approximately 20k at around the 11th of December 2017. As investors started to convert their Bitcoin profits that they recently found, they convert them into Ethereum, and we start to see Bitcoin's price retreat a little as we see Ethereum start to rise. Ethereum's bull run continued thereafter onto its high of around $1,400 at around the 8th of Jan. So there's a 28-day gap approximately between both the highs, which shows that there's usually a delay in this cycle. This shows that the flow of funds has a significant effect on price action, and hopefully now you're beginning to understand why a good understanding of the flow of funds can help us understand which assets we should have positions in if we are searching for the greatest return at any given moment. Next, investors flow from large cap into mid cap altcoins. So when the price rises come to a halt in Ethereum and the large cap altcoins, these new profits from their Ethereum positions are rolled into midcap in the continued search for yield. Examples of midcap tokens include Stellar, IOTA, Dash, Dodge, to mention a few. And these midcap coins are usually built on the Ethereum platform, with often a much smaller market capitalization than that of Ethereum. Many of these smaller altcoins are also conveniently paired with Ethereum on these exchanges, so trading between them is quite easy. For example, XLM Ether, XLM ETH, these are commonly mentioned trading pairs, and there's lots of them, hundreds of different pairs versus Ether. These smaller tokens are less well known by the general public and therefore attract less attention. However, when the flow of funds reaches this market segment, their smaller market cap usually makes for some impressive price changes, with 100 to 200% gains in some tokens not uncommon. Some of you guys may be aware of this already and heard about some of the pumps you've seen as some of those smaller tokens. These mid-cap altcoins experience far greater volatility than the large caps in the previous step of the cycle and are considered much greater risk. So again, we can see as we go across the cycle, the risk appetite is increasing, investors' appetite for risk increases. And finally, from mid-caps to low-cap altcoins. So profits from the mid-cap tokens are then finally rolled into the low-caps at the end of the flow of funds cycle. This is the highest risk market segment of them all. Examples include Kyber Network, Theta, Steam, among some others. As funds flow into this market segment, the price rises can be extremely large due to their very small market cap. So seeing price rises of 3 to 5x or even 10x are not uncommon in this market. The low-cap altcoins are the last market segment in the cycle to receive the flow of funds. If executed correctly, the exponential price increases here can result in some impressive gains for investors. Now, of course, it's worth mentioning, yes, we're talking about the increases in the multiples, but they're very high volatile assets. They also have dramatic falls as well. So it's just worth mentioning that they're volatile in both directions. At the end of the cycle, investors will begin to take profits from their low cap altcoin exposure, where they may choose to do one of two things. They may either hold their profits from the cycle back in Bitcoin, or they could sell all of their cryptocurrency back into fiat and exit the market completely. If investors choose to hold their profits in Bitcoin, this may further fuel an uptrend and another flow of fund cycle may begin. And now, this isn't uncommon in bull markets where we might experience a number of these smaller crypto cycles before large-scale price corrections appear. But alternatively, some investors may choose to convert their profits to fiat, so convert back to Bitcoin and ultimately into fiat, so US dollar or pound, for example. And this will likely lead to large price corrections in the wider market as they withdraw their profits and leave the market completely. Now, this is what we saw in 2018, where the price of Bitcoin collapsed over 85%. That was a big withdrawal of their profits, their funds from crypto, and liquidating into cash. And of course, that just acts like a vacuum on all the market caps of the coins in the industry. So what can we learn from this? I think hopefully by now it's kind of clear that the funds flow across market segments. They go from a lower risk metric. Now, of course, Bitcoin is relatively higher risk considering other asset classes, but within the crypto ecosystem, it's the lower risk spectrum. So it flows from the Bitcoin all the way into the smaller altcoins, that are very volatile assets. If we notice significant positive price moves in one of the market segments, we might be able to infer what happens next, right? So a good understanding of this cycle and where we are in that cycle can give us some indication on what we might expect to happen next. Now, of course, this isn't always black and white. It's not always plain as day for everyone to see. But understanding this will certainly help you in understanding what you think might happen next within the cycle. Holding crypto asset positions at the end of the cycle might be risky, right? We've talked about how at the end of the cycle, investors have a couple of options. They could convert back to Bitcoin, and we may get to see another cycle continue, or if they liquidate into cash, then we might get a big pullback in the general markets. Holding assets at that period might be a more risky strategy, but again, this all depends on the strategy that you follow and according to your trade plan. Timings of the cycle can vary significantly, right? So there's no set time for these cycles, which should be fairly obvious. They can vary huge amounts of times. We saw that the run up in 2017-18 took a good few months, and then the bull run in the altcoins in 2018 also lasted for many months. So there's no set given time frame. The idea is about spotting some of these key terms or these key patterns between the different asset classes to know where we are in the cycle. And what's key is that we may be able to use the flow of funds cycle in our asset allocation decisions, right? That's the key benefit here, following the cycle to enhance our returns. Now, again, this has to be all within your trade plan. So, it depends on what strategy you're following, what assets you're allowing to trade within that strategy. But, if you've got more of an open book and you've got a wider range of assets to trade within, understanding where we are in the cycle should help you know where you should be allocating your positions, depending on which way you're looking to be positioned in those markets. It was quite a short webinar today, and that's the end of the crypto market cycle. So now I just wanted to open out to some of you guys who might have some questions about the specific market cycle, anything more crypto related. But yeah, any questions are fair game. Have you got any questions from any of the crypto traders, perhaps?
Hello.
Hi.
Hi, Adam. How you doing?
Yeah, good. How are you?
I'm fine, thank you.
Good. Go ahead.
I do have a question when it comes to technical analysis of cryptocurrencies compared to some of the assets, particular currencies. So, for example, technical tools such as supports and resistance don't really work in this market, do they?
Yes, they do. Yeah, I mean, I guess
Okay.
like all markets, you need to use them carefully. But yeah, support and resistance certainly does work. I mean, if you follow even a portion of the crypto Twitter madness that you can see, there's lots of chart analysis on there, and it does work to a certain degree, right? Like any other market. So it's hard to say it doesn't or does work. It's not going to work every time, but key levels are important to follow. So the long-term levels, on daily or weekly, can usually be relied upon. But again, there's always exceptions in these scenarios.
So, in terms, given the presentation you just given, would you say that fundamentals play a larger role than technicals in this market?
A good question. I think what's important is to actually take into account both aspects, right? It's important to be aware of key levels from a technical perspective. If there's key levels on a daily, weekly that have been respected numerous times over the past 1 to 3 years, depending on what you're trading, it's important to keep them in mind. But of course, fundamentals are becoming more important in this industry, right? So we're seeing lots of people talking about the market cap eating into the market cap of gold. So Bitcoin's eating into gold's market cap, and the idea is that people are assuming that Bitcoin is becoming the new gold, the more efficient gold, and that's why we're seeing a market share of crypto of Bitcoin rise so dramatically, and we're seeing gold kind of fluctuate. So understanding what's driving those moves is important. Many people are talking about Bitcoin being an inflation hedge, right? We see the money printing across the various large economies across the world, and Bitcoin is being seen as a hedge away from that inflation, a way to get out of the US dollar system, get out of the GBP system, and a hedge. So understanding those fundamental drivers is certainly important, right? But they should be used in combination with the technical points. So with the technical levels you're looking at, a combination of both is important. What you can also start looking at is more blockchain related data. So if you are trading crypto, there's a website we use quite a lot called Glassnode, which provides blockchain data, so directly from the blockchain, and it's a good way of reading activity on the blockchain. So you can look at things such as number of new addresses, number of active addresses on the Ethereum blockchain, and you'll notice this is a way of measuring activity. And the obvious assumption is the greater the activity, the greater the increase in price. Now there's some exceptions to that rule, but just to give you an idea that there's other fundamental drivers we can now start to use in cryptos, which you don't get in more traditional markets. So certainly look at technicals, use them in combination with fundamental drivers from a macro perspective, and then you can combine them also with some blockchain-based data to help you give multiple different data points.
Okay, thank you. That makes sense. Can you reference the website again? I didn't have a chance to take notes.
Yes, it's glassnode.co.uk. No, .com, sorry. So glassnode.com. And they've got various different metrics on there you can have a look at, all sourced from blockchain. They even have data on exchanges, so you can look at number of deposits on exchange, number of withdrawals, and of course the assumption there is if you're seeing lots of deposits onto exchanges, the assumption is that could be a bearish signal. It's not always the case, but it could be. Right? People are loading onto exchanges because they want to sell, and vice versa. If you're seeing a lot of withdrawals, you might think, okay, people have bought and they're now locking away their assets into cold storage. So these are the kinds of ways that people use this kind of data. But Glassnode have got lots of links on the different data pages where you can read more about it and how it works.
Okay, thank you very much, Adam. Thank you.
No problem, Ricardo. Do we have any other questions? Yes, glassnode.com, that's right.
Hi, Adam. I had a question about, it was kind of building on the fundamentals, actually, and to do with, you said you're going back to the onboarding of fiat currency. Is that more affected by retail investors, or is it more, obviously now we're seeing a lot of like asset managers and institutional investors coming in and investing like very large quantities of money into Bitcoin. The onboarding, is it more affected by these retail investors, or would you say more institutional?
Yeah, good question. I think maybe 1 to 2 years ago, the majority of the flow was from retail, right? Retail individuals opening up a Coinbase account, depositing funds, whether it's their savings or their income, and looking to get direct exposure to crypto. But I think over the past year, what we've seen is far more institutions start to enter this space and invest their balance sheet, right? This is a huge change in the fundamental drivers in our industry. 1-2 years ago, we never had that. We never had large companies put their balance sheet into Bitcoin as a hedge against US dollar. And we're seeing that a lot now. So I forget the name of the company. It was a few months ago. A lot of these companies tend to do a big announcement about it. But they really, I think they bought $500 million worth of Bitcoin from their balance sheet. And they did that around 13K. So of course they're seeing a nice profit in that. But that wasn't the driver. The driver for these companies isn't to make a profit. It's to hedge their USD exposure. They don't want to hold $1 billion in cash on their balance sheet when they know the US has just printed 25% increase in the money supply over the past year. Why would they want to hold all that money in cash? They know that it's being inflated away each year. So that's why fundamental drivers are important. So yeah, to answer your question, I think now we're seeing much more institutions enter this space. So they still are fiat onboarding. They're moving their fiat cash into the system. And I think we're going to see that increase over the next year, 1 to 2 years. More institutions are going to want to hedge away from the inflation, and more people are seeing Bitcoin. It's a great way to do that.
Okay, great. Thank you.
No problem.
The UK government have limited leverages on other platforms in the sense of to stop retail putting their life savings in crypto and hoping it will go up, and it may not go up. And I understand why the government has done that, but do you think it's like somewhat limiting how retail will come into the market?
Yeah. So what they've actually said is they're limiting leverage products within crypto. So what that means is the derivative products. So like what you guys are trading now, you're trading crypto on MT4 with leverage. They want to stop that. They don't want retail traders to do that. They will still allow you though to buy cryptocurrency, the cash market. You still buy Bitcoin, you can still buy Ethereum, but you can't trade it with leverage. So you can't go to City Index or IG and trade their cryptos on their MT4 platforms. It's different with us because you're trading on behalf of an institution with us, so we're the umbrella. But direct to retail, they want to avoid it. I don't think that will reduce the number of retail traders in the market because the majority of the flow is through cash, is through places like Coinbase, Bitstamp, where they want direct exposure to it. Yes, derivatives have been an increasing trend over the past year, especially with futures markets. But yeah, I'm not too sure about it. It doesn't really make much sense to me why they bring that in, yet you can go onto eToro and trade like Tesla with 50 times leverage. It doesn't make any sense to me why that's okay, but you can't trade Bitcoin with 5-10 times leverage. But regulators don't always get things right, and they kind of iterate, try things out, see what works, see what doesn't, and continue. But no, people can still trade Bitcoin and Ethereum in the cash markets, and to be fair, that's a much safer way of getting exposure to it if you're looking for the long-term hold. For us, on MT4, we have much shorter term positions, so it's good to have a bit of leverage. Of course, as long as you're using risk management in it as well.
Of course, that totally makes sense. And just one last one, sorry to be a pain.
That's all right.
But in America, they've got they're suing Ripple. How do you think that would affect Ripple's price, short term and long term?
Yeah. So a couple of years ago, there was a similar precedent for this in the US with a company called KIN, K-I-N. In 2017, they raised $100 million in an ICO, and it's a huge amount of money. Even back then, when people are raising crazy money, that was still big. And then the SEC came after them for calling their token a security, and they ended up paying a $7 million fine. I think it was $7 or $8 million fine. Bearing in mind they've raised $100 million, and that they just weren't allowed to issue any more securities or tokens. So it's not exactly the same case, but we can look at that as some kind of precedent on what's happened previously. Now, Ripple is very well capitalized, arguably the most well capitalized company probably in the US, not far off. And so they've got lots of capital behind them to tackle any penalties that may come. So the assumption could be that, if it's going to be similar, they may get hit with a fine, probably be much larger than 2-3 years ago, because I think they're trying to make a point here with Ripple. But I don't think it's going to be unmanageable for them. They should be able to manage that pretty well. Now, I don't know if that's the outcome. That's my opinion. We bought into Ripple at around 23 when we saw it sell off. Now, that was a bit of a risky endeavor, right? Because we don't know what's going to happen. And there's limited data points to look at, which is Kin is one of them. But knowing that
23 is very good. It's very good price. You guys got in.
Yeah, I mean, it did fall a bit lower than that as well. But yeah, we were wondering if that was a good decision at the time. But yeah, I think it's bounced back a little bit now. The long-term horizon is hard to say, right? I know the case is going to take a long time to play out. It could take many months, maybe years, for them to get to an end. And I think in that time, we're going to get lots of price fluctuation in the market, particularly in Ripple, as people try to guess or estimate what's going to happen. Yeah, I don't think it's going anywhere. I do have a personal opinion about Ripple myself on kind of how they manage their tokens and the selling of their tokens to fund their projects. I think there could be some more transparency around that. And that's something that needs to be changed in the industry, because there's lots of Ripple supporters that are diehard supporters who end up buying up all the tokens that the company are selling, in huge amounts. That's why you sometimes see divergences between Ripple's price and the general market, because they've got a lot of Ripple to unload. But that's a kind of a separate matter. Yeah, so we had a little bit of a exposure to it. It's not a huge amount, but I think it's good to have some exposure while it's so cheap. But only an amount you can kind of afford to lose even. So yeah, that's kind of my opinion on it.
And just one more thing, sorry, I said normal before, but they're meant to be moving. I've heard other analysts on Twitter and YouTube say that they will maybe look to move their headquarters to like a different country. Do you agree that will be a good or wise thing to do?
Which companies?
Ripple will move their headquarters because apparently they get sued because their headquarters are based in the US. So if they didn't base their headquarters in the US, they may get away from these type of future fines that they may incur.
I'm not sure that can work, because they raise the funds based in the US. So whether no matter where they go now, the offence was caused on US soil at the time it was done. But there are lots of crypto businesses. The previous one I was involved with as well. You incorporate an offshore entity to raise your funds, to issue your token. You don't generally do it onshore in the UK or the US, just because the regulators don't understand it. They're not as friendly to it. Whereas places like Cayman Islands, they're much more crypto friendly and have some kind of basic rules around token offerings. But yeah, I'm not sure really. It'd be interesting to see how that plays out. I mean, what do you think, Andrew?
I think it will be better if they did expand out, instead of like, at the end of the day, if there's a government that doesn't want you to set up your business and your crypto idea in their country, there'll be another country that will be like, oh, okay, we'll take you in.
Yeah, I think that's
so it'll just be a loss for the US in essence.
Yeah, I agree. Yeah, I do agree with that. It's not great for the US, and I think lots of economies now are trying to win businesses that are trying to innovate in cryptocurrency, and that seems to be a bit of a step backwards. So yeah, I agree with you there.
All right. So thank you for your time. Sorry to be so questiony.
No, that's fine. No problem at all. Any final questions? I know it was quite a short one, so happy to answer any more if there are them.
Hey, hi.
Hi, Anders. Is it Anders?
Yes, it is me. I got one question.
Yes, go ahead.
From my demo account, I can only see about 5 cryptocurrencies. Will it be possible we can trade more pairs in the future, maybe?
Perhaps in the future, yeah. Have a chat with Gavin or Desmond. Just make sure you can see all the assets on your MT4. But yeah, over time, as the industry evolves, yeah, there should be more assets we can launch. But I think it's also important that when some of you guys are learning to trade, we want to ensure that you guys are trading the most liquid and the largest market cap tokens out there. There are lots of very high volatile assets which maybe could be in an next iteration, but to begin with, yeah, you've got I think 6 or 7 assets to trade within. So hopefully more in the future.
Yeah, exactly, because what you just told us about the flow of money in the crypto space, and I've seen it for a few years myself, and I've learned to spot it. But yeah, then I just realized that we cannot take advantage of it. But yeah, that's why I asked.
Yeah, I mean, well, and as you can, you guys there's a range of tokens you trade. Some of them, I think you've got Bitcoin. Of course, you've got Bitcoin, large cap. You've got some mid caps there as well. So they're the core parts of the cycle, the initial three stages. So you can have exposure to them. I don't think it's good for you guys to be trading the low caps. I mean, we don't trade low caps either. It's a bit volatile down there. It's punting and betting. So you can take advantage of them. You have a select assets to choose if you want exposure to them. If you're unsure which are classed as large cap or mid cap, a good place to look at is on FTX's website, FTX. They're an exchange, and they have they basket the assets into large cap, mid cap, and low cap. So you get an idea on which tokens are each. But yeah, you should be able to get some exposure to them in the first parts of the cycle, that's for sure.
Yeah, and you're actually right there, because Bitcoin is the first one that pumps, and then it's Ethereum and Litecoin, and then it's something like Dash. Dash just began pumping also. So you're right. We got the old cycles basically, just not the low caps, but yeah, they are too volatile, as you say.
Absolutely, yeah. Trading with 5x, 10x tokens, and they can fall 80-90% very quickly. It's not a good place to be unless you're a risk taker, a very strong risk taker. We don't trade down there, but it's important just to be aware of it so that you guys can see it, right? You can see it in your trading view. You can see that the low caps are spiking. Okay, then you can have an understanding on where we think we are in the cycle, what's going to happen next. Are we moving back into Bitcoin? Are we expecting a sell-off in the wider market? And hopefully you can then begin to act based on that knowledge. Thank you for all your time. I hope it was insightful, and I'll be speaking to some of you very soon. Thanks a lot and have a great day.
Thanks, Adam.
Thank you.
Thank you, Adam.
This conference is no longer being recorded.